One of the highlights that we had last week, I think, was just the when we had Stan Druckenmiller talking about his concerns. Actually, it was a double tail risk he was worried about. But one of the things that we haven't heard in a long time is inflation fears, where he actually talked about the potential for double-digit inflation, which for all of us, given what we saw in Japan and how hard we've tried to even engender 2%. It's hard to get there. And then people argue about whether we're measuring it accurately. But is all of this policy that we're seeing from the Fed and fiscal authorities, has that got you worried about inflation in the next 2, 3, 4 years?
So, I've been worried about asset price inflation, which we have seen, and that has led to all sorts of excessive risk taking. I'm getting worried about housing price inflation, and what we may well see is housing prices decoupled from income affordability. The third element, which is inflation of goods and services, there is reason to be more worried. I don't buy into the double digit, but look at what's happening to the supply side. More in firm concentration, which means more pricing power, rewiring of global supply chains, which means higher cost, and deglobalization, which means less competition. So if you look at the supply side, it is unambiguously inflationary. What we need for inflation, though, is for the demand side to come back. And that's where the uncertainty is right now, Joe.
You also point out often, Mohamed, the disconnect between financial markets and the real economy and how loose monetary policy sort of widens that gap. By definition, does that mean that the reversion to the mean or the regression to the mean over the next 3 or 4 years, given all of this loose money, that's the other thing that Druckenmiller kind of indicated, although he's not, I wouldn't say that he's pessimistic about the future of the country, but I think he did say that returns are going to be tough, maybe tougher to come by, given that we're digesting all this for the next 4 or 5 years. You see it that way?
Yeah, it's convergence rather than necessarily valuations coming down. So if we get economic growth, if we get corporate revenues, if we normalize, then you can have fundamentals validate elevated asset prices. It is possible. It is not likely, Joe, but it is possible. So what you're asking really is a growth question. Do we get enough growth, enough improvement in corporate fundamentals for us to validate asset prices? We have a huge mountain to climb on this. I hope we do, because that's good for Main Street, not just good for Wall Street, but good for Main Street. But it is a very long road ahead.
This sounds like the wedge that you used to talk about a couple of years ago that was closed by the underlying economy improving and growth improving, and it caught up. You think it's less likely that it happens this time around, but it still could. But do we need to write policies? And then if we need to write policies, we're back to something that might happen in November, because there could be very different policies based on the outcome of the election.
Yeah, but think of your discussion a minute ago with Andrew. Okay, you talked about how hard it was living with COVID. That's what we're trying to do. So both of you said, you know what, our inclination is to go back to what we were doing before. But then suddenly we wake up to the fact that the health risk is still out there. So that's why this is such a tricky environment. We've got to learn to live with COVID. We're not going to have herd immunity quickly. I doubt we'll even have it by the end of next year. It takes time for a vaccine to be distributed, to be disseminated, and that's assuming the vaccine is perfect. So we've got to learn to live with COVID, and we've got to strike that balance whereby you don't come on the air, and Andrew doesn't come on the air and said, you know what, I was starting to do something normal again, but I had second thoughts. Because those second thoughts is what holds back economic activity and holds back fundamentals.